Let's take a look at our 60-minute chart of the S&P 500 as we look at what happened in the last week. The gray area being the area of the overnight trading, and the white area being the area of the trading during the regular trading session. We didn't have much going on Martin Luther King Day on Monday. You can see the futures were open, the markets were closed, and they basically moved sideways. There was a big drop in the dollar and a big pop in the euro right there, and you could see it did kind of give us a little move down there overnight, but nothing really there. Some news that came out, and Bitcoin was in the news a lot this week, is South Korea and China really cracked down. We'll call it the crypto crackdown, and Bitcoin plunges way more than 20% at the worst level during the week. And that China rating agency reduced U.S. debt. You got a little blip on the downside here, but not much. And the NASDAQ on Tuesday jumped up early in the day as the Dow crossed 26,000 and the dollar rebounded. But copper had a big drop overnight there, and what happened was, as you can see, that there was a big reversal here, and some news out here that the U.S. debt that came out of Deutsche Bank, the amount of it, which is the U.S. will issue in the next year, is $1 trillion. And here we're talking more about big debt coming out, and that's really the big issue that we're going to be facing in here. And Deutsche Bank says that that could really cripple the world equity markets. And markets reversed, and you got this big selling coming in the NASDAQ that really led the market to the downside. You can see about a 35-point decline in here in the S&P 500, and then it rebounded late in the day. But then we got a rally back overnight in here. Bitcoin, by the way, plunged overnight to under 9,400, close to 93, and then rebounded to close to 12,000. So it had this massive 35% move. And here on Wednesday, the techs led the rebound back. The news was Apple. Apple says that they're going to contribute $350 billion to the U.S. economy over the next 5 years. Apple rallies 3 points and really leads that NASDAQ back. They're going to repatriate a good portion of their money. They know that they have a $38 billion tax liability, so that's going to go to the government. They're going to build a U.S. campus here, another one, hire 20,000 workers, and give $2,500 in restricted stock to employees. So that got the market rallying back in a big way, and you could see that made the high of the week here, and it's been chopping around ever since. On Thursday, jobless claims were near a 45-year low, as the bond market saw that and fell a full point. Bonds are certainly weak in here, as is the dollar, and that debt ceiling problem was looming there. So we got a choppy day here on Thursday. After the close on Thursday, IBM earnings came out. They beat, but margins were weaker, so IBM moved to the downside. That led the Dow down. Dow was down on Friday, even though the S&P is higher. So we have a mixed market here on Friday. The House passed that debt ceiling, that CR, and that's we're still waiting for the Senate here late on Friday. You can see we have only about an hour and a half to go here on Friday as I'm recording this, and we're still waiting for news out of the Senate. Before I get into the short-term view, just a little announcement. On Tuesday morning, 8:15 Eastern Time, I'm going to be a guest on Benzinga's pre-market prep show. So go to the internet, look up Benzinga pre-market prep, and I'll be interviewed on there. I was on there once before. It was a ton of fun, and the guys on there are great, and I'm sure we're going to be talking about markets and history and where we think things are going to go. So check into it. Benzinga pre-market prep show this Tuesday, and that will be at 8:15 Eastern Time. Let's take a look as we look at the S&P 500 SPX, which we thought would be moving to the downside. Now, it basically has been just barely creeping up, despite the fact that it had a decline over the just over Tuesday, which was a pretty sizable one. You can see that one right there as it made this dark cloud cover right there, but it's all we did was get a stall in the market, with the peak here on Tuesday and the peak here on Friday pretty much very close to the same 2807 number. We were last week we said we were looking for the next 2 weeks to bring it down over here to the rising support level. That level is now moved up just a touch to the 2753 level. So we're looking for the next week to come down to that 2753. As you see, these green dashed lines are the cycles that we're looking at right now. There's an older dotted blue line right over there that's also pointing to a similar period. That time period we're looking for right now is the 25th to the 28th of January as that corrective low period. So we're looking for a down week. Momentum still strong, and you could see the bottom of the slim ribbon coming into that zone right there. So we could easily get down into that rising support zone without doing any damage to this upward trend, and then move up again sharply. That wouldn't be much of a decline when we're looking at that to that level. It wouldn't be even 2%. So we have that expectation, and maybe the issue around the debt ceiling will be some stimulus for that. But we think we're going to get down to that level between the 25th and 28th of January, a minor decline. When I look at the NASDAQ NDX, you can see in here a similar lined up cyclical period in here, as it has moved up a little bit beyond that Tuesday high just by a couple points. This rising support zone right over here takes you down to around 66.70 area right there. That's what we expect also in that period of January 25th to 28th. So we're looking for it to roll over in the next week and pull down. Every single time we have said anything like that, the market has seemed to extend for longer periods of time. But you could see right now, when you look at these cycles, the length of the advance here and the length of the advance here is pretty similar to the length of the advance here. In fact, we've gotten up a little bit longer right now. So you see a 4 or 5 day decline here, a 4 or 5 day, 6 day decline here. That's what we think we're getting into right now. So we think the NASDAQ is getting ready to pull down. I actually don't really think that this news that we have in Apple, that we've had the NASDAQ moving up, is all that good for the stock market, actually, or for stocks. Yeah, it's a good sign as Apple is getting a lot of that money back in the country and is giving money to their employees and building a campus and all that. You know, pretty good for the economy, right? But is it really good for Apple? Maybe they can use that money for some acquisitions down the road. But the stock being up where it's at right now, based on that news, I don't get that. I think Apple's going to help the stock market move back to the downside for a modest recovery, modest decline or correction, which is just going to be probably in the next week or week and a half, less than 2% to the downside before they start moving up again. So that's a look at the stock market, which just basically a slightly up on the week, and we're going to look for some small correction. That is it. Make sure that you send me a request for that link, slim at askSlim.com, for our level 4 special. And don't miss me and Benzinga in the morning on Tuesday, 8:15 Eastern Time on their pre-market prep show. I think it's going to be fun. I hope you enjoyed that video. Be sure to subscribe to our YouTube channel, and also go to askSlim.com and become a level 1 member. No cost to you, and we have some special videos for you to see. I know you'll enjoy them.